Are you one of the thousands of Canadians who've been using Newton to buy and sell cryptocurrencies, and now you're staring at your tax forms wondering, do I have to report all of this? It's a question that keeps a lot of people up at night. The world of crypto is still so new, so fast-moving, and let's be honest, a little bit intimidating, especially when it comes to the nitty-gritty of taxes. You hear stories about the CRA, Canada Revenue Agency, cracking down on unreported crypto gains, and it can feel like a ticking time bomb. But what's the real story? What's the truth? Today, we're going to dive deep into that question. Do you need to report every single Newton transaction? We're going to break down the rules, look at what the CRA really cares about, and give you the tools and the clarity you need to navigate this with confidence. So, let's start with the big picture. The CRA considers cryptocurrency to be a commodity. That's a crucial first point. It's not like Canadian dollars, it's more like gold or silver or real estate. And just like with those assets, when you sell crypto for a profit, you have to report that profit. That's a capital gain. But here's where it gets a little more complex. It's not just about selling. There are a few different scenarios where a disposition of your crypto can trigger a tax event. Think of a disposition as any time you get rid of your crypto. It could be selling it for Canadian dollars, swapping one crypto for another, or even using it to buy a coffee. Now, let's get specific about Newton. You've been using the platform to buy Bitcoin, Ethereum, maybe some Solana. You've been trading, taking advantage of those price swings. You've been hodling. Every single one of those actions, if it results in a disposition, is a potential tax event. So, let's break down the most common scenarios. Scenario 1, you sell your crypto for Canadian dollars. This is the most straightforward one. You bought one Bitcoin for $50,000, and you sold it a year later for $60,000. Your capital gain is $10,000. And guess what? The CRA wants to know about that $10,000. Not the whole $60,000, just the profit. The key is to keep track of your adjusted cost base, or ACB. That's the total cost of all the units of a particular crypto you own, divided by the number of units. It's a little complex, but platforms like Newton often provide transaction history that can help you calculate this. Scenario 2, you swap one crypto for another. This is where a lot of people get confused. They think, I'm still in crypto, so it's not a taxable event. But the CRA sees it differently. When you trade your Bitcoin for Ethereum, you're essentially disposing of your Bitcoin and acquiring new Ethereum. That's a disposition. So, you have to calculate the capital gain or loss on the Bitcoin you just traded away. This is where keeping meticulous records becomes absolutely critical. Scenario 3, you use crypto to buy goods or services. This is a rapidly growing area. You used some of your Bitcoin to buy a new laptop, or a pizza, or an NFT. Again, the CRA views this as a disposition. You're giving away an asset, your Bitcoin, and you're receiving something of value in return. You have to calculate the capital gain or loss based on the fair market value of what you received. So, the short answer to the big question, do you need to report every Newton transaction, is yes, in a way. Every transaction that results in a disposition of your crypto, selling, swapping, or spending, is a taxable event that needs to be reported if it results in a capital gain or loss. Now, I know what you're thinking. That sounds like a nightmare. I've made hundreds of trades on Newton. How am I supposed to track all of that? That's a valid concern, and it's where the right tools and a little bit of knowledge can make all the difference. The good news is that Newton, like many other crypto exchanges, keeps a detailed history of your transactions. You can usually export this data. The bad news is that this data alone isn't enough. You need to use the data to calculate your ACB for each and every crypto you hold. This is where crypto tax software comes in. There are a number of excellent programs out there that can connect to your Newton account and other exchanges to automatically import your transaction history, calculate your capital gains and losses, and generate the necessary tax forms for you. It's not a substitute for a professional accountant, but it can be a massive time saver and a lifesaver when it comes to getting things right. So, let's talk about the CRA. What happens if you don't report your crypto transactions? The CRA has become incredibly sophisticated in this area. They've been working with international partners, and they are now using data analytics to identify individuals who are likely to have significant crypto holdings and who haven't reported their gains. They can issue a requirement to provide information notice, which is a fancy way of saying, hey, we think you have some crypto, and we want to see your records. If you don't comply, or if you're found to have underreported your income, the penalties can be severe. These penalties can include back taxes, interest on those taxes, and even significant fines. In some of the most serious cases, intentional tax evasion can lead to criminal charges. The key takeaway here is that it's much better to be proactive and get this right from the start than to wait for the CRA to come knocking. So, let's bring it all back to Newton. Newton is a great platform, and it's made crypto accessible for so many Canadians. But using it comes with the responsibility of understanding your tax obligations. Every buy, every sell, every swap, they're all part of a larger picture that you need to be able to explain to the CRA if they ask. My advice? Start with a clear plan. Step 1. Download your complete transaction history from Newton. Don't wait until the last minute. Get it now. Step 2. Use a crypto tax software. It's a small investment that will save you a huge amount of time, stress, and potential headaches down the road. Step 3. If you're a heavy trader or your crypto portfolio is a significant portion of your net worth, consider consulting with a qualified tax professional who specializes in cryptocurrency. They can provide personalized advice and ensure you're compliant with all the latest regulations. Step 4. Keep meticulous records. Even if you're using software, it's always a good idea to have your own records to back things up. The world of crypto is full of opportunities, but it's also a world of responsibility. And understanding your tax obligations is a core part of that responsibility. Ignoring it isn't a strategy, it's a gamble, and it's a gamble you're almost certain to lose. So, let's recap the main points. Cryptocurrency is a commodity, and when you dispose of it, you trigger a tax event. A disposition isn't just selling for cash, it's also swapping one crypto for another or using it to buy goods. The CRA is getting smarter and better at tracking crypto, and the penalties for non-compliance are severe. The best way to protect yourself is to be proactive, use the right tools, and get professional advice if you need it. With that said, thanks for watching and until next time.